Respected guests, ladies and gentlemen, a very good afternoon to you all, and welcome to the headquarters of the National Open University of Nigeria, a bakery where we not only mass produce graduates, but we mass produce quality graduates for the betterment of the country. Welcome to the 39th in the series of Inaugural Lecture of the National Open University of Nigeria. And today, in that series, and in keeping with the tradition of this university culture, we'll be dissecting a topic simply: technological innovations and informal financial institutions, implications for economic development amidst cultural diversity in Nigeria. And that will be dissected by no other than Professor Wilfred Ugwuanyi, a professor of banking and finance in the 39th Inaugural Lecture. Respected ladies and gentlemen, before we begin to bring to you what that topic is all about, permit me at this very moment to recognize some very respected dignitaries seated at the high table. It is a pleasure this afternoon that I bring before you the Vice Chancellor of the National Open University of Nigeria, Professor Oji Uduma, who today is ably represented by the Deputy Vice Chancellor in charge of administration, Professor Shehu Adamu. Sir, you are most welcome. I'd like to also seize this moment to recognize the Deputy Vice Chancellor in charge of Technology, Innovation, and Research, Professor Christine Ofulwe, the Registrar of the University, Mr. Oladipo Ajayi, the Bursar of the University, Malam Nasuru Barafa, and the Librarian of the University, Professor Angela Okpala. Respected ladies and gentlemen, the reason we are gathered here is no other than to witness the 39th Inaugural Lecture of our respected Professor Ugwuanyi, and is very much seated at the high table. It is a pleasure also that I welcome before you the Dean housing our inaugural lecturer, the Dean Faculty of Management Sciences, who is also at the high table with us. Respected ladies and gentlemen, let me recognize members of the Senate of the universities who are here seated. Respectfully, I want to welcome before us Professor Emeritus Godin Sogolo, who is also here with us. Members of our inaugural lecturer family who traveled from distant places to join us here for this all-important event. Respected members of the university communities, and friends and well-wishers who are also here with us. Gentlemen of the press, ladies and gentlemen. It is the 39th in the series of our inaugural lecture, which we are very proud of. And without any further ado, at this moment, I would like to invite the representative of the Vice Chancellor, in person of the Deputy Vice Chancellor in charge of administration, Professor Shehu Adamu.
Thank you. It is my honor to represent the Vice Chancellor at this very important occasion. He is unavoidably, in all sense of its ramification, absent. He wanted to be here. Unfortunately, there are events that made it impossible for him to be here in person. Thank you. Distinguished members of council here, members of Senate of the university, principal officers, our inaugural lecturer, my friend, Professor Wilfred N.J, the university orator, deans, directors, head of departments, invited guests, particularly the family members of the inaugural lecturer, colleagues, ladies and gentlemen, good afternoon. It is my pleasure to warmly welcome you all to the 39th Inaugural Lecture of the National Open University of Nigeria. Inaugural lectures remain one of the most significant academic traditions in universities across the world. They provide a distinguished platform for professors to formally present their scholarly contributions, reflect on their research journey, and share insight that advance knowledge, inform policy, and address societal challenges. Today's event is yet another affirmation of our university's unwavering commitment to academic excellence, research, and intellectual engagement. The National Open University of Nigeria, as the foremost institution of open and distance learning in the country, continues to champion access to quality education while simultaneously strengthening its research culture. We recognize that beyond this access, providing access, our mandate also includes generating knowledge that is relevant, impactful, and responsive to national development and priorities, which in today's inaugural lecture, I believe my friend and brother is going to do so. Today, we are privileged to listen to Professor Wilfred Ugwuanyi, a distinguished scholar in banking and finance, whose inaugural lecture is titled Technological Innovation and Informal Financial Institutions, Implications for Economic Development Amidst Cultural Diversity in Nigeria. This topic, you will agree with me, is not only timely, but also highly relevant, given the rapid evolution of financial technologies and the critical role of informal financial system in supporting livelihood, especially within the diverse cultural setting such as ours. I don't have to go into the lectures, but those informal sectors, financial sectors, have significantly contributed to financial transactions in the country. And I have no doubt that the lecture will stimulate intellectual discourse, deepen our understanding of the intersection between technology, finance, and development, and offer practical insight that can inform both policy and practice in Nigeria. On behalf of the Vice Chancellor, Professor Uduma Oji Uduma, let me also use this opportunity to commend the faculty of management sciences, the organizers, and all those who have worked tirelessly to ensure the successful hosting of this event. Your dedication reflects the collective commitment of this university to uphold academic traditions and excellence. Distinguished ladies and gentlemen, as we proceed, I encourage all of us to listen attentively and engage intellectually and draw valuable lessons from today's lecture. This is the opening remark of the Vice Chancellor, who is unavoidably absent, Professor Uduma Oji Uduma. Thank you.
Thank you very much, Deputy Vice Chancellor in charge of administration, Professor Shehu Adamu, representing the Vice Chancellor of the University, Professor Uduma Oji Uduma. Respected ladies and gentlemen, at this very juncture, if it pleases the chairman of the occasion and the Vice Chancellor of the University, may I invite the University Orator, Dr. Matthew Oguche, to please invite our inaugural lecturer for his citation. Dr. Matthew Oguche, please.
I present the citation for Professor Wilfred N.J. John Ugwuanyi, the 39th Inaugural Lecturer. Vice Chancellor, Sir, distinguished guests, ladies and gentlemen, it is with great honor that I present the citation of our 39th Inaugural Lecturer, Professor Wilfred N.J. John Ugwuanyi, a professor of banking and finance in the Department of Financial Studies, Faculty of Management Sciences, National Open University of Nigeria. Currently, Professor Ugwuanyi serves as the director of the Olusegun Obasanjo Center for African Studies in the university. He was born on 5th November 1959 in Enugu State into a community whose values of discipline, hard work, and communal kinship shaped his character and later defined his remarkable journey. His educational sojourn began at Community Primary School, Imilikeagu, and later Assemblies of God Primary School, Aba, where he finished his primary school in 1971. He attended Obolo High School, Obolo Ike, where he obtained his West African School Certificate in 1978. He continued his high school education at the Government Teachers College, Makurdi, as an external candidate, where he obtained a Teacher's Grade 2 certificate in 1982. Thereafter, he proceeded to the Obare Institute of Management and Technology in Lagos, where he obtained several professional qualifications, including the London Chamber of Commerce and Industry Higher Stage Certificate in Auditing, Accounting, and Economics, as well as certificates and diplomas from the Association of Business Executives London in Management and Computer Studies. His academic aspirations reached a significant turning point when he enrolled at the Enugu State University of Science and Technology, ESUT, for a postgraduate diploma in banking and finance. He later obtained a Master of Business Administration, MBA, in banking and finance from the same university in 1992. He enrolled as a doctoral student, leading to the award of a Doctor of Philosophy, PhD in Agricultural Economics with specialization in finance in 2003 at ESUT. Professor Ugwuanyi began his academic career at the Enugu State University of Science and Technology in 1992 as an assistant lecturer in the Department of Banking and Finance. Through dedication and hard work, he rose steadily through the ranks, Lecturer 2, Lecturer 1, Senior Lecturer, and ultimately attained the prestigious rank of Professor of Banking and Finance in October 2006. Following decades of a distinguished service at ESUT, Professor Ugwuanyi arrived at the National Open University of Nigeria, NOUN, in 2019 as Professor of Banking and Finance in the Department of Financial Studies, Faculty of Management Sciences. He was elected Dean of the Faculty of Management Sciences from 2022 to 2024. He has also served as a visiting professor in several institutions, including the Central Bank of Nigeria Center for Economics and Finance at the University of Nigeria, UNN, Enugu campus, Ebonyi State University, Caritas University, Kogi State University, and Ave Maria University. A consummate academic with an undeniable passion for research and academic mentoring, Professor Ugwuanyi has been an exceptional teacher and mentor. His commitment to academic mentorship has seen him supervise more than 35 master's degree students and 25 doctoral candidates. He has published a wide array of research articles in reputable national and international journals. These include 5 textbooks, 3 chapters in books, 35 peer-reviewed articles, and 12 conference papers. His research focus and expertise spans financial development, technological innovation in financial intermediation, macroeconomic policy, foreign direct investments, FDI, banking system reforms, and financial fraud prevention. He was recognized as the best lecturer in the Department of Banking and Finance, ESUT, during the 2014 to 2015 academic year. His widely recognized textbook titled, "The Nigerian Financial System, A Systematic Approach," has become a valuable reference for students and researchers studying the structure and dynamics of Nigeria's financial system. His intellectual engagement extends to conference presentations, seminars, and professional forums, where he had presented papers on topics ranging from banking sector reforms and budgeting in public administration to financial management in developing economies, giving him a respected voice on financial policy, institutional reforms, and economic governance. Professor Ugwuanyi's commitment to community service is reflected in his membership of several professional bodies, including the National Institute of Marketing of Nigeria, the Nigerian Institute of Internal Auditors, the Association of Business Executives London, and the Association of National Accountants of Nigeria, ANAN. In the service of the people of Enugu State, He was appointed Commissioner for Finance from 2007 to 2008, and later as Commissioner for Budget and Economic Planning from 2008 to 2011. He also chaired the Enugu State Committee on Internally Generated Revenue, IGR, and the Millennium Development Goals Oversight Committee. He was elected as the chairman of the Academic Staff Union of Universities, ASU, ESU chapter, appointed the associate dean of the School of Postgraduate Studies, supervising editor of the ESU Journal of Management Sciences, and editor-in-chief of the Nigerian Journal of Finance. In furtherance of his community service, Professor Ugwuanyi was elected Secretary General, Imilike Town Union Development Association, Udenu Local Government Area, Enugu State, 1999 to 2003. He was elevated to President of the Association in 2003. Later, he served as Chairman, Imilike Agu Multipurpose Farmers Cooperative Society, Enugu. Professor Ugwuanyi is a devoted family man. He is happily married, and together with his beloved wife, he has been blessed with 6 children, whom he fondly and proudly refers to as his 6 blessings. Vice Chancellor Sir, distinguished ladies and gentlemen, it is with immense pleasure that I now invite you to warmly welcome our inaugural lecturer for the 39th Inaugural Lecture, as he delivers his inaugural lecture titled Technological Innovations and Informal Financial Institutions, Implications for Economic Development Amidst Cultural Diversity in Nigeria. I now invite the Vice Chancellor to please invite the inaugural lecturer to the podium. The Vice Chancellor, sir.
It is my honor and singular privilege on behalf of the Vice Chancellor of National Open University of Nigeria, Professor Uduma Oji Uduma, to invite Professor Wilfred N.J. to present the 39th Inaugural Lecture of the National Open University of Nigeria. Professor Wilfred, sir, you may wish to present.
The Vice Chancellor, National Open University of Nigeria, Professor Uduma, Uduma, the Deputy Vice Chancellor, Academics, the Deputy Vice Chancellor, Administration, the Deputy Vice Chancellor, Technology, Innovation, and Research, the Registrar, the Librarian, the Bursar, the Dean, School of Postgraduate Studies, Dean of the Faculty of Management Sciences, Deans of other faculties, Head of the Department of Financial Studies, Director of Institutes and Centers, Professors and other members of the Senate, distinguished colleagues, distinguished guests, staff and students of the National Open University of Nigeria, gentlemen and women of the press, ladies and gentlemen, good evening. Having undertaken excessive research on technological innovation, informal financial institutions, and their impact on personal and professional experiences, this lecture synthesizes key insights from these engagements. It examines notable findings, highlights associated challenges, and presents informed conclusions alongside relevant policy recommendations, collectively. These perspectives are intended to deepen our understanding of the term technological innovation and informal financial institutions, implications for economic development, and mixed cultural diversity in Nigeria. I was raised together with my younger siblings in a rural setting by my illiterate but industrious parents. In this environment, informal financial system served as the major framework for practical or economic and social activities. My parents were primarily rural farmers, but they diversified their livelihood through seasoned trading, petty commerce, and other economic activities, depending on the season of the year. This diversification ensured that school fees were paid, we had food security, and family obligations, both social and cultural, were met. Beyond the household, my parents actively engaged in community life, participating in cultural, social, and financial associations that strengthens network of solidarity. As the first child, I was introduced early to these systems. I joined my age mates in cultural, social, and economic activities designed not only for communal bonding, but also to generate tangible benefits for our families. For instance, boys of the same age group worked collectively on their parents' farms during planting season and harvesting sessions. Through this cooperative rotational system, each household received adequate farm labor while reinforcing trust, discipline, and reciprocity. Hunting expeditions were also organized, where groups of young men shared both the risk and the reward of the activities. During off-farming period, my mother engaged in soap production, making black soap from ash powder. We, her children, distributed smaller pieces of this finished product to women in nearby and distant villages, particularly those who had purposely stored ash for her. These exchanges were not simply economic, they were acts of reciprocity that were intended to families and communal network. Trust was the currency and the collateral of each transaction, underscoring the deep cultural nature of informal financial arrangements. I also witnessed firsthand the practice of sharecropping with cocoyam. Young men would request seedlings from my mother, who would also allocate to them my father's plot of land for cultivation. They undertook the farming work, including planting and weeding, while she provides the inputs. At harvest time, the produce will be divided equally into two parts. My mother will take one part, and the cultivator kept the other. This arrangement ensured food for both parties, while reinforcing trust-based economic relationship. In addition to farming and trading, my parents were deeply involved in community associations that double as social and financial institutions. These groups require members to contribute regularly, creating a collective fund from which loans could be drawn. Such loans were typically used for crucial needs like paying children's school fees, financing marriages, covering burial expenses. Repayment was also structured around trust and social accountability rather than legal enforcement. The credibility of each member and their commitment to the community determine their access to credit. This informal network also extended into broader social obligations. Community members contributed to support one another during situations or events such as illness, marriage ceremonies, or the death of a relative. For example, when someone dies, contributions were mobilized quickly to support the bereaved family, covering costs for food, coffin, clothing, and other logistics. Similarly, marriage required collective input in the form of gifts, money, or labor. These contributions were both financial and symbolic. They are firm social bonds and guarantee that help will be reciprocated in the future. Another form of support came through the age grade association, where members not only work together on farms, but also pool resources for community projects. These associations created a sense of identity, belonging, and accountability. They also functioned as financial safety nets. Members unable to meet contributions in cash could repay through labor or in-kind support. I also recall how women groups played critical role in informal finance. Married women, for instance, organized contribution circles where each member deposited a fixed amount during meeting and the pool sum was handed to one member in rotation. This system, known in many parts of Nigeria as Esusu or Isusu, ensured that even those without access to banks could accumulate lump sums of money for important expenditure. Trust, honesty, and reputation were the pillars on which these practices stood. Through these experiences, I came to understand that financial transactions in rural communities were not isolated from culture. They were embedded in a network of reciprocity, solidarity, and collective responsibility. The economic system was inseparable from the social fabric, a reality often overlooked in discussions and believed that privileged Western-style financial institutions are superior. These early experiences shaped my worldview and influenced my educational journey from primary through secondary school and even into my struggle to gain admission into the university. I experienced firsthand practices on how informal financial system supported not only household, but also the aspiration of some individuals, small and medium enterprises. School fees were often raised through community contribution, loans from rotatory savings group, or assistance from an extended family. At times of hardship, my parents relied on network of trust and reciprocity rather than formal institutions. As I advanced in my studies, I came to realize that these practices were not peculiar to my family or community alone, but were culturally deep-rooted and widespread across Nigeria and many parts of Africa. Rotating savings groups deeply embedded in the social fabrics of diverse communities. They provide resilience in time of economic hardship, bridge gaps left by formal banking, and sustain cultural values of solidarity and mutual support, Ugwuanyi et al. 2015. This realization has become central to my academic interests. Informal financial institutions are not merely survival strategies of the poor, nor relics of pre-modern economics. They are living systems that reflect the creativity, adaptability, and resilience of African society. They demonstrate that finance, in its most fundamental sense, is about relationship, trust, obligation, and reciprocity, not merely about money. The purpose of this lecture, therefore, is to examine the evolution of these informal financial institutions, their interaction with modern payment systems and financial structures, and the transformative role of technology amidst our age-long cherished cultural heritage in shaping their future role. In doing so, I will highlight not only their economic relevance, but also the cultural significance, showing that any attempt to modernize finance in Nigeria must reckon with these enduring cultural institutions. A minute, please. Now, I want us to discuss and have a look at the payment system we have in Nigeria, presently and before. A payment system serves as a comprehensive framework designed to settle financial transactions through the transfer of monetary value, integrating three core components: institutions, instruments, and infrastructure. We talk that a payment system consists of three major issues. The institutions, like in Nigeria, we have the financial institutions comprising banks and non-bank financial institutions. Then we have the instruments, diverse instruments such as credits, debit cards, paper checks, and negotiable drafts. These are all primary instruments that we use in settlement of debts. Then we have the infrastructure. A robust infrastructure of a standardized procedure and advanced technology ensures exchange of funds is both possible and secure. Historical roots of payment system. Long before introduction of colonial currency and formal banking, African societies developed indigenous systems of exchange to meet their social and economic needs. These systems were deeply embedded in culture, governed by trust, and reinforced through communal living. Before the advent of Oyibo man, we are doing business in Nigeria, we are doing business in all our communities. Barter. We had trade by barter, which involves exchange of goods for goods. That is, if you want yam and somebody, you look for somebody having orange, there must be a double coincidence of want. That's the system we have. Among the Igbos of southeastern Nigeria, market days, Eke, Afo, Ori, and Onkwo, structure the rhyme of trade. These market cycles provided regular opportunities for exchange and sustained inter-village commerce. Hausa farmers managed household economies with sophistication despite absence of a formal schooling. Indigenous accounting. Our colonizers did not teach us how to manage money. They only taught us how to read and write their language, English. A typical case was in Things Fall Apart. Unoka was a chronic debtor. However, he was a great accountant. He was able to keep records. Nobody taught him that, but he was a great accountant. Nobody taught him how to keep records. On his wall, he was drawing lines, the lengths indicating how much he's owing. So if you come to demand for the money, he will tell you, come, go and sit down. You are demanding for your money. That man with that longer distance is not coming for the money. So give me a chance. So you can see that Oyibo did not teach, what they taught us is how to read and write their English. They did not teach us arts of commerce, nor did they teach us business. Well, development is continuous. You cannot cage development. Trade by barter had limitations. Both parties needed to desire what the other parties have, and which limits flexibility. Impact, limited trade partnership, and made market rich. Lack of a standardized measure of value. There were no common standard to measure equivalent across diverse goods, making transactions subjective and difficult. Impact, price disputes, and inequitable exchange. Absence of store of value. You cannot store. Perishable goods could not be held for long-term savings, making wealth accumulation nearly impossible for most. Impact, no savings possible for future investment. Difficulty with deferred payments. Obligations for future delivery could not be easily enforced, creating risks and limiting credit-based transactions. Impact, weak credit markets, no loan system. Limited scalability. As communities grow larger, the system becomes increasingly complex and cumbersome, hindering economic growth. Trade by barter could not sustain economic growth. Impact, hampered regional and inter-community trade. Transition to money and colonial influence. we were colonized, and they forced us to adapt to their way of life, to their way of economy. And as such, we now start having cowries. But before they came, we used cowries, iron rods, and manillas, all of them with inscriptions indicating their value. We equally have, during the colonial era, we start having pounds, shillings. We now, because of their business, we now have shillings, pounds. When we had independence in 1960, we equally started using their pounds, and later on we changed to naira. Now, dual system. In all this we are discussing, you can see that the informal traditional financial system coexists. Traditional and modern system coexist. Rural Nigerians continue to rely on local markets, isusu and communal labor, alongside formal banking. Key insight: the colonial transition did not erase indigenous practice. Instead, traditional and modern systems coexisted, with communities adapting monetary tools to cultural norms. For example, while British authorities introduced the pound sterling and later the federal government introduced the naira, rural Nigerians continue to rely on local markets, rotating savings group, isusu, and communal labor. The blending of the system ensured continuity of trust-based transactions, even as formal instruments became dominant in urban centers. Modern payment system. Today, a payment system is understood as the operational network that facilitates the transfer of money between parties using defined instruments, institutions, and rules. Okonta 2019, Ugwuanyi 204, the central bank has introduced a policy to encourage a shift from cash-based to electronic transactions. Now, we now have cash. Despite innovations, cash remains the most widely used medium of exchange, particularly in rural areas. Check, though declining, are still employed in business transactions and formal institutions. Electronic fund transfer allows direct transfer of money between banks' accounts, reduces reliance on physical cash, speeds up settlement time, and is increasingly used for salaries, bills, and business payments. Debit and credit card, introduced by banks and supported by global payment system for both in-person and online transactions. Usage is largely concentrated in urban centers due to infrastructural limitation. Mobile banking and USD. Mobile technology has transformed financial services access, allowing customers to transmit money, check balances, and pay bills through phones, expand banking access to previously underbanked population. Internet banking provides users with platforms to manage accounts, transfer funds, and pay bills online. However, internet penetration challenges limit widespread adoption, particularly in rural communities. POS terminals. Increasingly commonly in markets and retail outlets, POS terminals allow merchants to receive cash payments. Their spread has reduced dependence on cash and expanded opportunities for small-scale business. Now, fintech. Fintech, technology reshaping Nigerians' financial landscape. Fintech, Scofield and Patrick 2016 defined financial technology as a new field that uses technology to improve activities in finance, competing with traditional financial methods in the delivery of financial services. Companies like Pega, Opay, and Fluidwave have expanded financial services, offering mobile wallets, payment gateway, and digital lending. This platform cater for both urban and rural population, making transactions faster and more inclusive. Now, they have made efficiency. Things we are now having, transactions are more efficient, financial inclusion, finance is reaching those that's not reaching before, security is being provided, is now more secure, and the economy is more transparent. The modernization of Nigerian payment system is not just a technical or economic issue. It is deeply cultural. Policies that ignore local reality often encounter resistance, while central bank cashless policy aimed to reduce cash reliance, uptake was uneven because many Nigerians, especially rural areas, continue to place strong cultural value on physical money as tangible store of wealth and trust. Mistrust of banks, often rooted in historical experiences of fraud, mismanagement, or exclusion, has slowed adoption of formal payment instruments. Many find participating in a system more trustworthy than transferring money digitally to an unknown account. Nevertheless, cultural adaptation is happening. Some groups now allow members to send contributions via mobile money or bank transfer, while still maintaining the social ritual of accountability. This hybrid model demonstrates how modern systems can complement rather than displace cultural institutions. Challenges facing modern systems in Nigeria: digital illiteracy. Digital illiteracy. Many of us cannot afford phones, nor can we use phones, especially in rural areas, to do financial transactions as required. Infrastructural deficits. Many places, we don't have network. You don't have light. Cyber security risks. My dear colleagues, the type of risk involved in hacking is monumental, and as such, many people try to avoid that type of risk by saying, I will go my native way. Cultural preference. Deep-rooted cultural preference for cash and face-to-face transaction create resistance to digital adoption. Many feel more secure handling money to a trusted neighbor than transferring it via app. Cost barriers. Cost of data these days are becoming very high. And as you continue to transfer, that is how you are being charged. That is if you can afford the data. Regulatory lag. Sincerely speaking, one of the challenges of fintech is that the regulatory system is still in process. The central bank and other regulatory agencies have not placed adequate regulation vis-a-vis as it concerns fintech. I've done some studies on informal financing published in renowned journals, and you will see from what I'm going to discuss now how people feel about, both educated and uneducated, how they feel about the use of informal financing. Now, I had total observations, 13,300. Key data dimensions, 5. The year, 2025. Empirical evidence, 100%. The study impact of formal financial institutions on the socio-economic development of Nigeria, Southeast, Ugwuanyi et al., 2025, examined 5 key dimensions: demographic characteristics of respondents, awareness and usage of informal financial institutions, financial intermediaries and transaction behavior, sources and scale of business financing, social support network, and financial solidarity. Demographic characteristics. Overall, informal financial institutions primarily serve moderately educated, working age, and individuals engaged in informal economic activities, supporting grassroots. Each and every one of us here, I challenge you, have a look, take a pen. If you take a pen out of your salary, look at what percentage of your salary goes on informal financing. Somebody is sick, you visit the person. Somebody gave birth, you visit the person. These are informal financing. May I reiterate that one major difference between informal financing and formal financing is that it is not regulated. because I came to see your wife when she delivered, and when my wife delivered, you did not come, I cannot sue you to court. It's informal financing. Awareness and usage of informal financial institutions. A lot of, digital adoption is remarkable high. 90% of respondents own mobile devices, and 86.1% use them for financial transactions. Technology has become an important facilitator of informal financial sector. The findings indicate that informal finance remains the dominant ecosystem for daily transactions, sustained primarily by accessibility, social trust, rather than institutional sophistication. You see how convenient it is. We have cooperative society here in NOUN, and you know that, or even borrowing from a neighbor, or even borrowing from your brother, if you are sick or had a handicap, if you have a challenge, the first option, as Igbos will say, the first option for you is your brother, your sister. That is the first place you are going to seek help. That is informal financing. Unfortunately, if you are here in Abuja and you don't belong to any cultural group from your zone, in fact, you can hardly find Nigerians, wherever they are, 2 or 3, and they are having an association. They have ethnic group. This is to help them. They use it to finance both social and economic activities. Sources and scale of business financing. The chart highlights a dual financial structure in which informal finance sustains grassroots enterprises, while formal finance remains relatively exclusive. Bridging the system remains a key challenge for policymakers. Yes, informal financing hardly finance long-term. They hardly finance large-scale business. And then, this is where formal finance comes in. But then, that is the gap that policymakers have to bridge. How do you reconcile the two? Social support network and financial solidarity. Family and community support. 55.7% receive family community support to large extent, while only 15.2% receive to support. This reflects the traditional African model of extended kinship. I've already said it before. I don't know, but I'm convinced that if, for example, other ethnicity, please permit me, but if an Igbo man should die, there's a proverb we say, when the corpse starts smelling, you look for the owner, you look for the close relatives. Am I correct? When the corpse is smelling, people don't go near it carelessly. They look for the close relatives. That is financing. And if you have been going to somebody's own, if you have been visiting friends, if you have been participating, you have to go. And they will carry dead body home. They will hardly, like in my own area, they can hardly bury somebody outside his locality. Cooperative societies. 51.9% receive cooperative support to a large extent. People are now forming cooperatives and other groups, savings group, to finance their group, changing response to distress beverage. While 62.7% prefer to send money during bereavement, only 37.3% choose to visit. I want to talk about this particular one. Something is happening in Nigeria culturally. A dear friend, somebody lost a husband or lost a wife, and you call him or her, please send account. She will send account, but the impact is not there. That if you go there and say, oh, madam, sorry for your loss, that touching of hand is more than 10,000 naira. But today, what we are now doing, what technology is doing, send account. Now, in Nigeria, we have what we call the Nigerian financial system. The entire Nigerian financial system is made up of both formal and informal financial institutions. Formal financial institutions include banks and non-bank financial institutions and other supervisory financial institutions. However, that's not our topic for today. Our topic for today has to do with informal financial institutions. And so we are going to dwell on these informal financial institutions. Informal financial institutions include cooperatives, rotatory savings credit association, ROSCAs, accumulating savings and credit association, ASCAs, family contribution pools, daily collectors, ACAWO, and age grade groups. While informal systems are regulated by statutory authorities, informal systems operate outside government regulation, yet they remain resilient because they are culturally embedded, accessible, and designed to meet the needs of the population, excluded from informal financing. For millions of Nigerians, especially in rural communities, the informal financial sector is the financial sector. It is the default means of mobilizing savings and accessing loans and managing risks. The persistence of this informal sector reflects their adaptability and the deep trust they command among members. Let's take them one by one. And we have Rotating Savings and Credit Association, ROSCAs. I wouldn't say that, but I know that 99% of us here has belonged in one way or the other to ROSCAs, i.e., you just 3-4 persons you meet on regular basis. You now stipulate whichever method, who is going to take first. And every week, every month, you take today. Next, we contribute and give you. Next time, we contribute and give the other person. One thing I have to say here is this. The objective is to save. Saving is one of the greatest difficulty we have in finance. But when you join any issue group, you see that for the fact that you know that on Mondays you are going to contribute, you are already saving. So, we have this group. ROSCAs are informal financial arrangements where a group of individuals agree to meet for a defined period to save and borrow together, a form of combined peer-to-peer banking and lending. Members contribute a fixed sum at regular intervals, and the pooled funds are distributed to each member in rotation. Trust and peer monitoring ensure compliance. These systems are particularly common among market traders, artisans, civil servants, and rural dwellers. Membership. Group individuals meet for a defined period, fixed contributions at regular intervals, daily, weekly, or monthly. Enforcement. Trust and peer monitoring ensure compliance. Social sanctions, not legal enforcement, govern the system. Distribution. Pooled funds distributed to each member in rotation. Every member receives the lump sum once per cycle, common among market traders, artisans, civil servants, and the rest. Now, we have another type. ASCAs, Accumulating Savings and Credit Association. Accumulating. The first one I talked about is whereby, say, a group of 10 that are paying 10,000. If you pay 10,000 and you are 10, and it is there weekly, every week, you know what each person will receive. That's how it will go till it gets everybody. But in case of Accumulating Savings and Credit Association, you don't collect the money that day. Every week, we know what you are contributing. You come and pay it into that pot. That money will be there. And the advantage of this is that you can make an emergency withdrawal. You can make an emergency withdrawal. But in the first one, if you are in need of money, you have to wait till it gets to your turn. 2, Under ASCAS, you now see that even when you borrow, they can say that this money will attract a little interest, so that you will see that at the end of the year or at the end of the stated period, there may be a little dividend on the money paid. The term ASCAS gained momentum by Putnam R. 1993, and refers to savings group in which funds are not immediately withdrawn, like in Roscas, but kept to grow as loan markup. Unlike Roscas, ASCAS accumulates savings into common fund, which is then lent to members or invested for profit. Profits are distributed at the end of the cycle. Mode of operation: a participant is designated as a treasurer. Payout: at the end of the agreed period, all borrowed funds and interest are paid back into the pot. The total is then shared among members in proportion to their contribution. Historically, most ASCAS started as Roscas among familiar peer groups. Social and cultural informal financing. This is a social or cultural informal system handed down from generation to generation. Friends, relatives, community members rally around an individual with financial support or gift during celebration or crisis, marriages, death, or so. You now see what technology is doing in this social cultural something. We now have what is called WhatsApp group. If you are a child or you are getting married, you do a WhatsApp group. And when you do that WhatsApp group, it will interest you to know that you will add a lot of names. Now, when you add a lot of names, some are those that you have gone to visit, whom we are paid to. Some are going to give you, hoping that there is hope in this man. If I invest in him, he may invest in me. That is, there's a payback period. So, what are we saying here? You now see that these systems are culturally embedded in us. Nobody taught you that when your mother is going for a meeting in the village, a family meeting, that he's saying he come from here, that you do your own. Nobody taught you that there's a need to build a primary school, to reconstruct your primary school in your village. It is the responsibility. It's informal financing because you come from there. So all these are actually what we regard as social and cultural. Like, men, permit me, in my area, woe-betide men, if a woman should lose a husband in my area, that night, that woman, assuming they have a room and parlor, in the parlor will be not less than 3 women. In the bedroom, not less than 4 women sleeping with her. But if it is a man that lost a wife, there's problem. Around 12 o'clock, this one will carry torch. Good night to everybody will go. Good night to everybody will go. And even the children will say, Daddy, go and sleep. You are telling Daddy to go and sleep in that bed he has been sleeping with the wife, alone. That man will be dead in the night. But for the fact that women have been financing their own, they don't joke. Once a fellow woman loses a husband, you don't need to ask them that they have to bring food for the children that night. You don't need to tell them that they have to go and sleep with that woman. That is traditional informal financing. And there's no way we will develop. Technology cannot erode this from us. It is there. So we have social obligation to visit sick. All right. Is anybody teaching you to visit somebody who is sick? Nobody teaches you that because you know it's an obligation. But when you are sick, you expect somebody to visit you. And when they visit you, they say, look at what he brought to you. May, oh, thank you. You have taken record. The principle of payback, research suggests that 95% of these gifts are payback for an earlier gift given, or because of the donor expects to receive from the beneficiary later. Cultural association. Cultural association force, cultural force that enforces repayment where the only penalty, yes, of interest is, we have learned that there's no law governing this, yet people do. For you to be ostracized in the village, in your town, that man, in fact, it's a norm that if you have not been participating in burial in my area, when your own die, everybody will not come to dig them. Or if they say that you come to bury, to dig the grave, they will ask you to pay and pay and pay. And today, if you have not been going home, they now have professional mourners, because it's going to look like a crime that you are burying your mother or your father and nobody is crying. And so you go to the town, look at a signpost and look for professional mourners, those that will cry when you are burying your mother, because you are not going for others. So when they get, you will see them, once they land, they will cry, you will shout, and then the moment the burial is finished, where is the stout? Where is this one? Yes, because you have not been participating in that of others. SACCO, Savings and Credit Cooperatives. Savings and Cooperative Society, common known as cooperative and credit union, operates as large-scale mirror of ASCA's model, often serving hundreds or even thousands of members. Unlike smaller informal groups, SACCO are formal entities, typically governed by national laws and regulatory framework. You now see that we are maturing gradually. You now see that we are talking about SACCO. Like here in NOUN, we have cooperative societies, and these cooperative societies are actually governed by the law of the land, and records and everything are being kept very well. So it is better than the other tools we have discussed. And they said every member must acquire a minimum of at least one share, which serves as a certificate of ownership. The SACCO utilizes capital from shares to establish its initial pool of investment. Share-based dividend. Members benefit from the cooperative success through dividends paid out based on their shareholding beyond basic savings. Credit accessibility. Members who maintain a regular monthly savings deposits are entitled to borrow from the cooperatives for personal development, business investment, or to increase their stake. Flexible transactions account. SACCO offers withdrawable savings accounts, allowing members to freedom to deposit and withdraw funds at their discretion to meet daily liquidity. Now we can see that cooperatives have more legal and are more sophisticated than the two we have discussed, because they have records, they are regulated, and they have more capitals. So our cooperatives should wake up, they are doing the correct thing. Now we talk about other informal financial institutions. We have talked about family and pools. You don't come to tell me that your brother needs money when you have not helped him or her. The first port of call is you. Each and every one of us knows our duty. It's informal financing. My family, my family. Interestingly, we don't like discussing it. We don't like discussing it, but it is true. Oyibo man can have one child. Oyibo man can have one child because medically, the risk of death is highly diversified. But here in Nigeria, if you have two, no medical facilities, nothing, you are afraid that what is the remaining one is gone. So what we are trying to say is that we have families, women association, town unions, men's loan association, age grades. There are all types of informal financial institutions. There's one I want to talk particularly that most of us participate, and that has to do with daily contribution. Daily contribution, Akawo. If you look at these Akawo people, they do a nice work. One, I've said that savings is very difficult. These people go from house to house or from shop to shop. They don't go very early in the morning. They go at a particular point in time when they are sure that you have made some money. They know the type of business you run. So they come when they are going to get what you are. And thank you. Whatever they collect, what you have agreed to be collecting. All right. Whatever they collect from you, at the end of the day, they take a little percentage and it gets going. Benefits of informal financial institutions. Participation depends on trust and reputation rather than formal requirements. Individuals excluded from formal banking due to lack of collateral, credit history, or literally can readily participate. You see, what we are trying to say that it is easy to access credit in informal financing. Culturally embedded, speed and flexibility. You can just talk and get today. You can meet a friend and get today. Support micro, yes, they support microfinance, trust and capital base. All these are easily accessible. Contribute or distribute financial burdens. Challenges of informal financial institutions. Absence of legal protection, we have talked about that. Exploitation by money lenders. Please, be very, very careful with money lenders because they have a way, especially if you are trying to take a loan and they ask you to bring your car, to bring your C of O. That type of loan, be very careful because they are so sure it is always worded so that before you could finish, they are looking for that your C of O, they are looking for that land, or they are looking for that car. So please, before you take such a loan, be sure that the cash inflow, you are sure of the cash inflow to pay the interest and the principal as and when due. Let's talk about enduring strength of cultural strength and cultural significance of informal financing. Informal financial institutions cannot be understood solely as an economic arrangement. They are deeply embedded in a cultural system. Contributions to an issue or are not just about savings or borrowing money. They are acts of solidarity and belonging. Members who default risk more than financial penalties. They risk social, you are ostracized in your community. You know what that means. So, there are qualities that make informal financing to work stronger and stronger. Because of time, I'm really running very high. So I'm running very fast. Let's have a look at challenges of technology in Nigerian financial system. Digital literacy gap, we have talked about that. Cultural resistance, people don't want to change because what is your culture? It is very difficult to live it. Cost barriers. Many people cannot afford good phone, Android, not talk about the data. Infrastructure benefit. We don't have electricity, we don't have internet. Cybersecurity risks, very high. Technology versus culture. Mobile transfer may fulfill financial obligation, but often lack cultural and symbolic significance. I have a personal experience that I would like to share with us here. It has to do with 6 young medical doctors that graduated and are very desirous of traveling abroad. The money is not there. But what did they do? They formed an Isusu group, created a common purse, a pot, whereby they indicated those who had gone abroad, what were they contributing, and those who are within Nigeria, what they will be contributing, to help each and every one of them japa to Canada. You can't believe it that with this, their contribution, within 4 years, 6 of them has traveled. And that is the efficiency of informal financing. Conclusion. The Nigerian financial landscape is a living testimony to the coexistence of tradition and modernity, from barter to cowrie, from Isusu to fintech applications, payment and financial system, having evolved in response to the needs, realities, and values of the people. Informal financial institutions have persisted not because they are resistant to change, but because they are culturally embedded, accessible, and trusted. Opportunities. Introduction of modern payment system and technological innovation has expanded opportunities for efficiency, transparency, and inclusion. Challenges. Infrastructure deficit remains a very critical challenge up till now. Central message. Informal institutions are not relics of the past, but engine of resilience, solidarity, and development. They are cultural systems as well as financial systems. Any effort to modernize Nigerian financial system must therefore recognize, respect, and integrate these practices. A mobile transfer may meet financial obligation, but it cannot replace the symbolic emotional value of physical participation in a community life, especially in case of a loss of a dear one or marriage ceremony. Finance is not merely about money. It's about people, trust, culture, and community. As Nigerians embrace modernization, it must not lose the value that have sustained its communities for generations. The challenge of building a system that are modern, yet authentic, efficient, yet inclusive, and technologically cultural. Policy recommendation. Nationwide campaign to equip citizens, especially women, rural dwellers, and elder generation with the skill to navigate digital platform. Respect culture. Technology must respect culture with policies. Encourage practices that preserve social bond so that efficiency does not come at the cost of solidarity. Develop hybrid net framework. Integrate informal practice such as Isusu and formal structures, ensuring cultural continuity while expanding financial security. Prioritize mobile payment, integration, AI-driven alternatives, credit scoring AP2, lending platforms, and blockchain. Target financial education, tax breaks. All this will help in what we are looking for. Recommendation to colleagues and university management. Borrowing is not a bad financial habit, but the challenge is, what have you used it for? Borrowing is not a bad financial habit, but the challenge is what you have used it for. Borrow and invest in a business that can pay for the interest and principal as and when due. As a civil servant, borrow from mortgage banks, similar development financial institutions to buy or build houses or land, repay through gradual salary deductions. Join a cooperative society. By joining a cooperative society, we are forced to save and use the savings for meaningful investment. Also, we will get other benefits appropriate to a member of a cooperative society. Join an Isusu savings scheme. A member will receive or collect a stipulated amount of money each year. This is compulsory savings for a member. Each member, on collecting the large sum, can use it to execute a designated or event or huge investment that ordinarily one's income alone cannot actualize. NOUN Cooperative Bank. My dear colleagues, it is high time that we should have a NOUN Cooperative Bank. I don't know what is stalling that. The cooperatives should not wait for management. The two cooperative societies should wake up and establish a microfinance bank. We have the market, we have the willpower. If you look at our students, if you look at our staff, if 5% of our school fees are paid through a microfinance bank owned by us, you will know how much we will make. So I'm of the opinion that the cooperatives should wake up. My Vice Chancellor, sir, my dear colleagues and visitors, please join me to appreciate God Almighty. He and He alone has been my helper all across all the crossroads I have met, all the crossroads I've met in my life. He has always been there for me to show me direction. Elroy, the God that sees me, I'm grateful. The Vice Chancellor, sir, National Open University, Professor Uduma O. Uduma, thank you a million times for graciously giving me this chance, sir. I really appreciate. Professor Olufemi Peters, the immediate past VC, Vice Chancellor, my friend and brother, thank you for all you did to ensure I got stabilized at NOUN. Professor Abdallah Adamu, thank you and God bless. You hired me at the verge of your going out as NOUN VC in 2019. To all Deputy Vice Chancellors, past and present, other management team, past and present, of this great university, I sincerely say thank you all. You all have been, in one way or the other, of great help to me, and now I really appreciate. Vice Chancellor, sir, please permit me to appreciate in a special way Dr. Ernest Odeiga, the former bursar of this great institution. He was very instrumental to my transfer to NOUN. Doc, God bless you. My dear colleagues and the entire staff of Management Sciences, NOUN, thank you very much. Today is our day. You people have been here of a dear family who really accepted me in NOUN. To my immediate directorate, Olusegun Obasanjo Center for African Studies, OCAS, God bless you for working with me. It shall be well. Going back to ASUT, I will start with His Excellency, Barrister Sullivan Chime, former governor of Enugu State, who in 2007 appointed and made me a commissioner for finance, even as a non-PDP card-carrying member. Nor having met him before, my first face-to-face meeting with him was at the venue of the swearing-in ceremony at Okpara Square. God, thank you for the gift of late Senator Ayo Ogwueze. May his soul rest in peace. God used him and his dear wife, Dr. Nkechi Ayo Ogwueze, for my appointment as a commissioner. Dr. Nkechi was then my former student, who I taught at master's level. On seeing me at their house, made a statement that helped me to make me a commissioner, saying he is one of the lecturers that never demanded a kobo from me. Doc, thank you, and may God Almighty bless you and your dear family. My special thanks goes to Dr. Chia Kondo, who supervised my MBA at ESUT. The late Dr. Malaki Obeta, may his soul rest in peace. He was my first initial supervisor and Professor CJC Akubilo, who finally saw me through with the supervision. My colleagues at the Department of Banking and Finance, Accounting and Insurance in ESUT, many of whom are now professors and readers, and passed through me either as supervisees or mentees. God bless you all. I thank God Almighty for the gift of late Mr. and Mrs. John and Violet Ugwuanyi as my parents. I really appreciate their wisdom and their care in ensuring that all their children were educated up to a minimum of first degree equivalent. I cannot forget in a haste my late mother. During vacation, while I was in secondary school, would wake me up, light a lantern, and ask me to open my books and read. That once you open the book wide, God will guide you to know what is inside, like others. I equally appreciate my stepmother, Mrs. Victoria Ugwuanyi. May God bless you and all your cares. Miss Esther Eze, her dear family, and my other siblings. Thank you. And may God bless and God bless. I am equally indebted to my late uncle, Mr. Benjamin Onyi, who was of great help in my educational career. My dear sister, Mrs. Eukaria Ona, the founder and the Chancellor of Ave Maria University, Bianco, thank you for coming and God bless. At this juncture, may I appreciate the coming of the President and members of Association of Nsukka Professors who are here. You are welcome. Thank you for coming. Imirike General Assembly, I thank you for coming. Marcus Ugwuanyi and the host of others, AKBK and Insurance Group, Onowu Paulinus, Engineer Pauline Nadi. Then, my dear wife, Professor Georgina Obinne Ugwuanyi, thank you for being a wonderful gift from God. In you, I really agree that 1 + 1 = 1. I really appreciate all your encouragements and sacrifices, of which I cannot pay for. God, please help me out. To the 6 blessings that God bless us with, Barrister Daisy Rogu and her family, Dr. Chimdin Ugwuanyi, I'm sure she's online, Dr. Chidera Ugwuanyi online, Engineer Choma Mesom Ugwuanyi, she's here, Chidubem Ugwuanyi, Chidalo Ugwuanyi, and other foster children who grow up with us. I thank you all. I want to thank my professional colleagues, my reverends that are here, all those that I might not taken notes. Please, I sincerely appreciate all of you. It is God that can pay you back for all your help in my life. Thank you and God bless.
I think he deserves more than that. Please, a round of applause for him. That was technological innovations for informal financial institutions, implications for economic development amidst cultural diversity in Nigeria by Professor Ugwuanyi. May I at this moment invite the Vice Chancellor of the National Open University of Nigeria, Professor Ugwuanyi Uduma, ably represented by the Deputy Vice Chancellor in charge of administration, Professor Showo Adamu, to formally receive the copy of the 39th Inaugural Lecture in the series here of the National Open University of Nigeria. Prof, please come forward and make the presentation.
My visitor, I hereby present a copy of my inaugural lecture to you, sir.
It's with great pleasure and honor that I receive this on behalf of the Vice Chancellor, Professor Ugwuanyi Uduma, for National Open University of Nigeria. Thank you.
Very quickly, before the Vice Chancellor come for the closing remark, members of the faculty and members of the department where Professor Ugwuanyi is coming from, we want to make a very express presentation to him before the Vice Chancellor wrap up. Very quickly, please. Faculty first, and then department, in that order, very quickly.
Permit me to invite the HODs and the coordinator, Semper, to join me in making this presentation on behalf of the Faculty of Management Sciences. Our able inaugural lecturer, I wish, on behalf of Faculty of Management Sciences, to make this plaque as a token of our appreciation that you really make us proud. So congratulations, sir.
Thank you, and God bless, my dear faculty. I really appreciate.
The department, please. The department, please. HOD.
It is my pleasure to make this presentation on behalf of the Department of Financial Studies to our amiable distinguished Professor of Finance, Professor Wilfred Ugwuanyi, for his outstanding contribution to education, knowledge, and humanity. Congratulations, sir. Dear. May I call my welfare colleague, Fortune and Keswe, to make the other presentation, please. Come and join me.
Professor Ugwuanyi, sir, I'm sure after this inaugural lecture, you'll be opening a gift shop. Is this another form of informal financing? Okay. From the Olusegun Obasanjo Center for Good Governance, African Studies, sorry. Very quickly, please, come forward. And that will be the last, I think, on the list. Okay.
Our dear Director, we appreciate you this day as a center and as your staff with this plaque. You have been a wonderful leader, and we pray for the best to come.
Thank you, my immediate director.
Prof, no doubt you've really mentored your words in the act of informal financing. Without any further ado, I'd like to invite the Vice Chancellor, Professor Ugwuanyi Uduma, ably represented by the Deputy Vice Chancellor in charge of administration, Professor Shehu Adamu, for his closing remarks. Sir.
Thank you so much. You'll all believe when I say that it has been a wonderful evening. Thank you so much, Professor. I will now call you Willie, informally, because of, yes. And if I were to mark and score these lectures, I will call Professor Willie and go back to page 1 of his lectures and give him additional 1 hour and say he must prove 1 + 1 is equals to 1. But I'm not going to do the marking. I will allow Professor Georgiana to do the marking. Yes. The lecture explores how technological innovation, particularly the fintech, has transformed Nigerian informal financial institutions while preserving their fundamental principle of trust and accessibility and then community nature. Traditionally, informal systems, as we have heard today, play a vital role in financial inclusion. With the advent of digital technology, these systems are no longer confined to physical interaction where you have to meet face-to-face, but they are rather replaced by technology that include mobile transfer, digital record keeping, and online platforms. Fintech has significantly expanded financial inclusion, enabling millions who were previously excluded to access savings, credit, and payment system, according to the lecturer. However, the lecture also highlights persistent challenges, including digital literacy, poor infrastructure, cybersecurity, and another risk of the Yahoo that they will now attack people's account and empty it. Importantly, the lecture also underscores the cultural implication of this transformation. While technology improves efficiency, it risks weakening traditional social bonds, where he gave an example of send your account. You see, initially I was feeling guilty when I came and shook him before the lectures, that he has been my friend for a long time, and I have not asked him to send his account so that I will contribute for the lectures. But now that it's better for me to come physically and say thank you so much and congratulations, I think that has done it. Nonetheless, I will still ask you to send. So thank you so much, Professor Willie. He made a resounding call about the microfinance bank. National Open University has one, and the management under Professor Olufemi Peters started effort to restructure it and strengthen it with the council of this university. And the process is still going on, where the cooperative itself will be given access and chance to contribute to so many activities in the banks. And I believe the present administration of Professor Ugwuanyi Uduma will continue the good work that was started that will lead to a strong microfinancial bank of the National Open University. I will thank all of you for coming and then again express my appreciation because he has highlighted things that were in the dark. For our seniors and those of us that have started collecting salaries, when salaries were 2,500, later on they changed to 3,000, we knew the long queues we used to join at the banks. And we knew the effort of these contributions. Because I can recall my first contribution was when we contributed to 2005 of us, and I collected 10,000 naira. I wasn't able to sleep properly that night because I was holding like my 5-month salary. And for you to understand the importance of that, my supervisor, MSc co-supervisor, led Professor Suleiman, Mariam Suleiman of blessed memory, had to call me and took the money away from me, that until I travel back home, tell them that I have 10,000, then come back and tell her what they said the money is going to be used for. So that was how important that contribution was. So I still urge members of the university community to join the cooperative of the university and to continue at departmental level. such contributions. You see them as if they are nothing, but they actually help in questioning some other things. And before it comes to your turn, you now plan on what to use it for. Once again, thank you so much, and I appreciate all of you on behalf of Professor Oji Uduma, and I believe you will agree with me that the 39th inaugural lecture justice has been done to it by my friend, Professor Willie, former Commissioner of Finance. I didn't know when you were Commissioner of Finance. I could have been frequenting Enugu. Thank you.
Thank you very much, my Vice Chancellor, sir. We are gradually winding up the program here, but before we leave, I'd like to invite the Deputy Vice Chancellor in charge of Technology, Innovation, and Research, Professor Christine Ofulwe, for a vote of thanks.
The Vice Chancellor, Professor Oji Uduma, ably represented by the Deputy Vice Chancellor Administration, Professor Shehu Adamu, principal officers here present, distinguished members of Council and Senate, our esteemed inaugural lecturer, Professor Ugwuanyi, all the members of Senate that are here. My work has been made easy because the representative of the Vice Chancellor said actually giving the thanks. But formally, on behalf of the management and the entire university community, I would like to give a vote of thanks at the close of this 39th inaugural lecture. First and foremost, we are grateful to God for the success of this event. Our appreciation also goes to our distinguished inaugural lecturer, Professor Wilfred Ugwuanyi, for a most insightful lecture. You all agree with me that the lecture has significantly enriched our understanding of the coexistence and interplay between formal and informal financial institutions, which have been enhanced by technological innovations. And it offers valuable directions for policy, research, and national development. Thank you very much, Prof. We thank the Vice Chancellor, Professor Oji Uduma, for his continued support for intellectual engagements at the National Open University of Nigeria. We thank the University Orator, Dr. Matthew Guche, and we thank the organizing committee and all the supporting units for their dedication and contributions to the success of this lecture. Our gratitude also goes to members of Council here present, Senate, staff, students, and to all our distinguished guests and well-wishers, especially the family of the inaugural lecture. Thank you for your presence. May the insights shared today continue to inspire research and innovation for national development. Thank you very much.
Thank you very much, Deputy Vice Chancellor, Technology, Innovation, and Research. And with that, we've come to the end of proceedings here, marking the end of the 39th inaugural lecture in the series of the National Open University of Nigeria. Before we depart, some quick announcements, please. Friends, family members, and other professional colleagues of our inaugural lecturer, you are kindly requested to converge at the library, which is about 10 meters away from this auditorium, for a sumptuous dinner, kind of, from the inaugural lecturer. Other members, I'm sure, must have gotten your takeaway packs and stuff. With that, we've come to the end of business, as I kindly request that we all be on our feet as we close.
The
May we please remain standing for the Vice Chancellor's recession to leave the auditorium. This is also recognizing two former Deputy Vice Chancellors who were here. Professor Mba Okoronko, OON, former Deputy Vice Chancellor in charge of academics, and Professor Bosworth, former Deputy Vice Chancellor in charge of administration. I want to thank you for joining us, please. So, respected ladies and gentlemen, this is how it panned out here this afternoon at the headquarters of the National Open University of Nigeria, signaling the end of activities here for the 39th Inaugural Lecture. We hope to see you again when next we open shop, hopefully for the 40th in the series here at the headquarters of the National Open University of Nigeria. Until then, on behalf of the Directorate of DICT, the Directorate of Media and Publicity, and the Office of the Vice Chancellor, New Media, my name is Ambrose Benado. Thank you all for being part of this event. Thank you and bye-bye.